So let's have a look at how to build a DeFi business. We've worked with over 2,000 Underdog Investor Group members by now. We've seen portfolios from $1,000 portfolios to $18 million DeFi portfolios in Fast Track, which we've worked with now over 100 clients in Fast Track, have deployed millions of dollars into DeFi. And you don't have to do either or. It doesn't have to be like a DeFi cash flowing business or a buy and hold. We really want to think holistically, and I'm going to show you a few examples. I took some screenshots from my own portfolio on different strategies we can deploy, how the two can work together. So I really hope you listen up. I really hope you get a lot out of this. By the way, we released 3 new free courses, and we have 2 more free resources. One of them being a list and tutorials of all of the tools we use, all the best tools we use to actually find opportunities, to be able to assess opportunities, to be able to enter opportunities, manage opportunities, and be able to track opportunities in your DeFi business. If you do want access to that, let me know. Just put DeFi business below and we'll make sure we get a link out to you really soon here. All right. On the left-hand side, we're going to look at DeFi cash flow. We're really talking about staking, liquidity pools, anything that earns us yield. And on the right, it's going to be buy and hold. And what I find really fascinating is people typically are like, yield farming sucks, I'm just going to buy and hold. Or sometimes the yield farming or the cash flow, the staking, the how do we cash flow this crypto crowd says, buy and hold is a waste of time. Why would I do that when I can cash flow? And the two are both right and wrong at the same time. In fact, I'm like, why don't we do both? I think humans see a lot of things in black and white, and so do investors. And like the real world is not so black and white, and investing is never so black and white. So on the DeFi cash flow side of things, you can see a SUI USDC. I'm going to use this example here just for this one, or this is on Cetus, by the way. Turbos Finance is also a DEX on the SUI blockchain. SUI's up like 268% or something since its low from a few months ago. So SUI USDC, you can earn 268% here. Now, if you enter a liquidity pool and the price shoots up and you get out of range, you miss out on all that upside. But if you just buy and hold SUI, which I've got, $10,000, $11,000 of SUI here on Navi protocol, if the market shoots up, I'm awesome. This grew from $3,000 to $10,000 over the last month. But if I was in a liquidity pool, I would have missed out on that upside. But what's funny is I was in a liquidity pool doing over 400% when SUI was cheap, and I was taking that SUI and I was feeding my bull run bag. And so it does take a little bit of having a look at where in the cycle are we. If we are early in the cycle, or if we're kind of in a bear market or sideways market, I want to yield farm. They don't have to be correlated pairs. I want to earn yield and I want to stack for the bull run. Once we're extremely bullish, you can start making some decisions here. If the yield is high enough, you might want to be in a liquidity pool with a stable and then taking all your earnings. Please let me know in the comments if this stuff's landing. You can take the earnings and fill your bag with it. Or you might choose to exit your liquidity pool completely and just go bull run bag. Or you might choose to liquidate half of your yield farm, set stuff on the lower range. So you might set your position here. You might be able to ride price appreciation. Basically your liquidity pool is just going to dollar cost average or ladder you out of your position into stables. So you're taking profit on the way up and you're sitting on a bunch in your bull run bag that's appreciating. It's not so black and white. You can do this any which way, just depending where you're at. My thesis as an investor is I like to invest in things that cash flow. I don't like to sit on things that just sit there. And so most things I invest in, they have to cash flow from real world assets and traditional markets and dividend funds. And I'm in index funds that pay out dividends every quarter, all the way to businesses, all the way to crypto. So that's just my thesis and the way I approach things, because that to me protects me on the downside. Even if the markets move down, at least I'm cash flowing, and I'm really big on that. Another example, again, just kind of a silly example, but here on XtraFi, I've got a bunch of XtraFi tokens staked, 17,000 XtraFi tokens, and I make about 45% on that. And from there, I'm able to take that and further lend it out. I know this is only 6%. We're talking small numbers, but again, this is just, we're not talking extra or XtraFi. It doesn't matter. This is just an example. Maybe you're making 40, 50% over here. You're staking it. Sometimes we're earning up to 100% over here. Then you're taking it. And now I'm holding it for price appreciation. This was worth around 400 bucks. Now it's worth 784. So I don't care about this 6%. I'm just taking it. I'm earning an income on my extra tokens, and then I'm taking it, locking it up, and riding price appreciation. That's another very simple example. We could look at this BTC position. You can see that every single day I've been earning fees. I've got around 4,812 fees that have auto compounded. I have another $2.65. Then I can take those fees and I can stack in my bull run bag, which as you can see over the last month, we're up around 11% or $29,000 in my bull run bag. And then guess what I do here? I ladder out, lock in profit. And then guess what? When the markets have a pullback, I'm sitting on a bunch of stable, which right now I'm sitting over 6 figures USD in stables that I can redeploy into the markets if there's a pullback. I am not trying to swing the bat and hit a home run because you're going to miss 99% of the time and you're going to lose money 99% of the time. I'm looking for consistent gains. How can I make 4, 5, 6% this month? How can I do that every month? I'm not going for 30%. What's the point of earning 30% one month and then losing half of it the next month? There's just no point. That's how most people are playing the game. We can look at different aerodrome positions. We're in all of these. Dollar USDC, 33% on stables. OVN USD Plus, we've been in this since basically the start of the year. It's still printing 210% because of the voting mechanism on aerodrome is really incentivizing this pool. You can double your money twice. How crazy is that? 100% is a double. And then you double it again. How wild is that? And we've been doing that since the start of the year. So guess what? All the fees generated, we can move them into whatever we want. Maybe we're stacking Arrow. Maybe we're buying Bitcoin. Maybe we're buying ETH. We're building our bull run bags. This wrapped ETH BTC looks really, really sexy right now. They've got some really awesome new opportunities. By the way, we just had a AMA with Aerodrome. I'll put the link up here. Super powerful. We had them with Ace from Aerodrome. It's an hour long, but it's going to blow your mind. You're going to become a better investor just listening to it. And then just remember, in concentrated liquidity, of course, we're setting a range. So this is a tool called Crystal, which is one of the best tools you can use. It's really everything you need when it comes to finding a lot of opportunities and be able to actually see the liquidity distribution and get an idea of the range you want to set, etc., etc. But all I'm getting at is you can set your ranges. And so remember, if it's a little bullish right now, you could set your range. You could just snuggle the bottom of the range and set your range wider. So as the price of the asset goes up and you get converted out of it and you're locking in profits. Now, this is a little different because we're talking a little bit more of a correlated pair here, but just ignore that for now. You can set your ranges any which way. And that to me is really cool, even when the markets are a little bearish. You could set your range close to the high here and kind of set it low. And as the price of the asset declines, you're basically just buying it cheaper and cheaper and cheaper, dollar cost averaging into the markets while earning fees. I'm a cash flow investor. I want daily cash flow. And I think once that clicks for people, they're like, oh, I get it now. And it's not either or. You can take that cash flow and build a bull run bag or invest in long-term holds, maybe in crypto or outside of crypto. And to me, you get the best of both worlds. Really, really hope that helps. We do have a free course. It's called DeFi as a Business. If you'd like access to the free course, let me know in the comments below. And we will have a awesome interactive best tools in DeFi along with tutorials on how to use them to find, to manage, to enter, to assess, all that fun stuff. And that's going to be, we're giving that out for free. So if you'd like access to that, just let me know in the comments below. If you like this video, like it, subscribe to this channel. We have a lot more coming for you. We're going 5th gear on YouTube and we're going to give away so much free stuff. I want people winning this game. I need you winning this game because the better you do in DeFi, the more the ecosystem grows. So we're all winning here. It's not a competitive game. So I want you to win. With that said, again, like this video, subscribe to this channel. And with that said, we'll see you with the next. Peace.